Hey everybody, it's Pete. Welcome to today's episode of today's Best Stock Picks. It is Thursday, May 14th, 2020. Just to give you a quick heads up, this will be the last video I shoot for the week. I'm actually getting married on Saturday. Super excited about that. So we're going to kind of decompress from work over the next few days. And Saturday morning around 7 o'clock, saying my vows. Very excited. If you find these videos helpful, please do me a favor, click down and subscribe and give us a thumbs up. And absolutely leave a comment if there's something that you'd like to see us review in a future video. I thought what I'd try and do today I get a lot of questions about like what's your actual process during the day. So what I'm going to do is we're going to kind of do like a lightning walkthrough of what I do in a lot more detail every day in our private community, which is basically we walk through which stocks we're looking at that day and why. And I'm going to kind of do a little bit different version of that today. I'm going to walk you through what I do first thing in the morning myself personally to get a feel for the market, and then overall look at the charts. Without getting into the websites, the very first thing I do is I look at as many different financial sites as possible to get a feel for what do I think is the bias heading into that day, and obviously over the weekend do the same thing for the following week. But I want to make it clear, I'm not looking for trade ideas. I'm my own trader the same way that I hope that you are your own trader. And you're not looking for somebody else to give you an idea. You're looking to be the asset. You want to be the money-making asset the same way that if you owned an algorithm, you are the algorithm. You are the asset that you can go into the market and say, I have a complete structure for what I'm looking for. I understand how to read the tape. I'm not just a chart reader. I graduated to tape reader, and I understand how to trade and make money. So that's what we're going to do today. I'm going to walk you through, as I said, the very first thing is looking at a bunch of different news sites. I'm going to get a feel for the opinions. Ironically, the one I looked everywhere this morning, and you are seeing so many differing opinions from really smart people. I love the market the next 6 months. The market's overvalued. It's going down. The S&P is value stuffed, I think I was reading today. The reopening's awesome. The reopening's horrible. We're doing it too soon. All the businesses are closing all over the place, which, by the way, is being influenced on the charts, which we will take a look at in a moment. So I'm going to show you two different run-throughs that we're going to go through. We're going to go through all of the first charts that I look at, again, getting a little bit of a deeper feel for what's going on in the overall market, which will, and this is kind of like, it's not structural, but it's absolutely the truth. I want to get a feel for whether or not all of the money in the market's doing the same thing. Is it all on the same page, which will influence how many positions I have, maybe even individually which sectors I should be trading, as well as how long and how many positions I should be holding. So the last week or so, which we're going to take a look in a second, maybe even the last few weeks, the market has exhibited as a whole quite a bit of indecision, especially over the last 2 or 3 weeks. And that is influencing how we hold the positions and how many positions we have. So if you think about the bigger picture, and again, all of the market, just kind of, that's why we call it smart money alerts, the daily e-letter that we send out. All of the money, is it doing the same thing or not? So you can kind of picture all of these people pulling a rope, and some people pulling it in different directions. But when the market's all on the same side, everybody's pulling in one direction, and it kind of really just goes, and the trades kind of fly off your fingertips. They're easy. It's just a question of how you hold it. The problem that most traders have is when they're in that indecision mode, not themselves, the market's in that indecision mode, it becomes a lot more stock specific to where you're finding good ideas, and you really need to be on top of your game in that particular instance. So, for example, the NASDAQ has been what we've been calling for the last couple of weeks because that's been much, much stronger and easier to find good ideas. And I didn't say easier to make money because you still need to know that last section. Wow, my hair is really up there today. You really need to get that last step of your trading where you need to understand how to make money. Finding setups and making money is not the same thing. And honestly, that's really where you need to ask somebody that you trust to say, am I seeing this right? Am I seeing the argument right? Am I putting enough stuff into this trading argument for how long I'm supposed to hold the trade? So getting to that next level is what we're going to talk about now. So if you've had a hard time over the last month, you're not alone. You're not alone. the market was so obvious and easy to hold those longer term trades for a while. And now we're kind of doing this. And again, look on any sites today and go to different ones. Just all politics aside, it's so obvious like which site and which channel is tilted one way to the other. You're not looking for that. You're looking for, can I get a subconscious feeling, or can I get a really good feeling of whether we plan to go higher or lower the next week, the next month? And the next week and next month is really on your tape reading skills. But if you're a day trader, you want to get a feel for the bias going into the day, but you still need to make your own decision. So for example, today, myself personally, I have a few stocks that showed relative strength yesterday, and I'm looking to get long those stocks on buy stops above the market. I believe it was PayPal was the first one that met that criteria. Yeah, we'll go to the chart in a second. PayPal was the first one, but then there's other stocks that what I call are strong stocks with a weak close, and I'm looking for and game planning, which is exact criteria. I'm looking for those strong stocks that have closed weak for a couple of days to actually push lower, and then find a spot to buy to initiate a new long, maybe a day trade that becomes a swing trade if they close in a certain manner, which we don't want to get into here today. So what we're going to do is we're going to go into the first set of charts that I look at after I spend some time with my coffee, actually my my big pot of coffee, and then we get into the individual charts. So we're going to run through that now. I'm going to show you one list of stocks that I call my universe, which is stocks I look at every single day. They're a part of the list. So I have my long stocks that were only longs. I have my short stocks that are only shorts from a day-to-day and week-to-week basis. Then I have this one group, this one universe of stocks that typically are in play, typically follow the market really well. If they're not, they trade cleanly, where I feel like I have a really good grip on them. So there's always three different lists of stocks that I've graduated to over the last 20 years that I can handle all of those. If you're a brand new trader, I don't recommend having that big of a list, maybe 2 stocks in your universe, 3 stocks, something along those lines, maybe even just one sector, and then look for maybe relative strength or relative weakness. But the easiest way for a new trader is, if the market's obvious, trade with the market and find stocks trading in sync with the market. That's the easiest play by far, because remember, think about that rope. If all of the people are pulling in the same direction, that same direction is all buying or selling pressure. It's much easier that way. So we're going to go to the charts. The first stock that I was talking about, the one that had relative strength from yesterday that I like today, you might call this kind of a trade of the day, is PayPal. Market closed weak yesterday. PayPal holding the gap up and looking for another move higher. So what I want to talk about here is this list here. So the first way I looked at it was looking at all of the major ETFs, the news sites. Now I go through the ETFs. So for argument's sake, we're going to look at the Dow, all right, the DIAs, the Dow Jones ETF. You can see that it's been sideways here, going all the way back to almost all of April through now. So no bias in the Dow. This is one of the reasons I watch the SPY ETF most of the time, or the SPY futures, because 500 stocks versus 30 stocks, I personally feel those 500 give me a little bit better sense of what's going on in the overall market. So from the Dow, I'm not seeing anything. And you can probably get some certain stocks that look exactly like that. So now moving over to gold. So gold stocks have been very strong if you've been following the video. So now I know from a relative strength perspective, just like that, gold stocks continue to remain strong relative to the overall market. And we've seen quite a few of those stocks making new highs and trading. So you see it like just in 2 minutes, we've already identified a sector that has relative strength to the market. All right, so moving our way down to small cap stocks, the Russell 2000. We actually were breaking out about a week and a half ago, which, by the way, if you know classic technical analysis, when generally speaking, what happens in market rallies is the market rallies, the indices kind of still drift higher, the leading stocks roll over, small cap stocks continue, and then everything rolls over. So it's going to be interesting to see how that unfolds. So from a tape reading perspective, if I was drawing trend lines here, which I cleaned them all up so we could do this together, I would be saying that the Russell has pulled back to a support level. So we'll be looking for some support there. Then we have agricultural stocks, again, trading range. So this is actually where a lot of money goes to die when you trade in that kind of a pattern. So again, just keeping it simple, not looking at those stocks, or setting alerts even more specifically. Oil, we all know the story, what's going on with oil, whether you look at the OIH, USO, or the futures, that's completely up to you. Remember, we're trying to get a feel for what's going on in the market right now, and a dramatically different picture in the NASDAQ. We've been talking about it, that they've been really strong. We've been, hopefully you've been getting the picks that we've been calling out. So that's a good sign there. Then we have retail, same as NASDAQ has been weak, strong. Semiconductor, SMH, kind of in a trading range. This has been interesting. Some of these have been making new all-time highs. We've been trading a lot of tech the last 2 weeks specifically. So again, what am I looking at right now? Well, we made a push, a pause, a push, and could not make a new high. So how would I be managing these stocks? Specifically here, I'd be looking for it to get out of 125 to 136. So I'd actually be drawing a window around this, a window, a box, whatever you want to call it. And again, I'm always looking for the price that the market is having a hard time getting through. And in that case, we're talking about right here, maybe even a little bit lower, right about there. So I'd be looking for it to trade out of this window. So I wouldn't have an opinion on this, but I'd have alerts and the stocks that are in that ETF. So the SPY, obviously, very different. So we're going to take a look at the contrasting look. It's not as long of a trading range as the Dow. So this is really important, why it's important to look at all of these. So here's the SPY. We pulled back. We're stuck in this box. So again, not a lot of conviction except intraday where it's easier to put. So again, just to make it stark, you can see the SPY here and the Q here. So a very, very different scenario. So good traders will be in the stocks that are easier to recognize relative strength and relative weakness, that are actually doing something. And that's why we've been on the SPY for the last couple of weeks. I'm just going to go through these again. So material sideways, same as the Dow. Not really going on a lot here in energy. And that's obviously what we've been looking at. We have had this slow grinding rally, but not the momentum type trades. XLF has been very weak. And again, if you've been following the best stock picks, I've been saying for weeks now, guidance coming out of JP Morgan and some of those banks have been weak, and we've been shorting them. So that's the scenario. And actually, we broke down yesterday in JP Morgan the last couple of days, and Wells Fargo. And there've been some super, super trading opportunities in the private community. We've been all over these stocks, especially as day trades. It's been very, very good to be in those stocks. So you get a feel, you immediately start to see, okay, the relative strength, relative weakness, which stocks should I be in? And again, obviously here, technology stocks that we've been talking about. And we'll make it clear, technology stocks versus the Qs versus the SMH, they're different. You have to dive into those individual ETFs. XLP consumer staples, obviously kind of a bounce with the rest of the market, but slowly drifting down right now. So you get the idea, right? So you get an idea of long or short. Then we'll go into the universe of stocks. You can see I have multiple lists. So the ETF stocks, my bullish perfect trades that meet 3 criteria, my selling perfect trades, and I can't give you those lists. Those are the gold mines for today. And then the universe that I watch every day, which I would call these market stocks. And I just have them sorted by alphabetical order. So you can see we would do rapid analysis. So Apple pulled back for a couple of days and looking to bid that because obviously it's a solid trend. Interesting setup here in Amazon, getting back to what I was talking about before. Amazon is actually showing me distribution, and I would not be doing anything in this stock until it gets out of here. So we've been trading this stock. You can clearly see the price that it's having a hard time getting through on the top and the bottom. So to me personally, that's the box. I'm not doing anything until it gets out of that box and have alert set. Boeing, I keep looking to get involved with, or I was up to a couple of weeks ago. I thought it was breaking down. It did not. And now we just keep consolidating. Another stock that's just in the news. So really, I'm not doing anything in this stock until what we call in the community, I'm going to let it tip its hand and then hop on board the easier trades. Looks like CVX is actually sideways, which we saw in the ETF before. So again, you can see how you start putting the pieces together. So we're actually in a new box in CVX. So we're looking, will it break the bottom or break the top? And what I mean by that is we are in a potential change of trend here zone. D-Dog is one that we've been trading long, and you can obviously see why. It's a little bit more stark. If you look at the weekly chart, look at that. I will say this, though, better swing trading stock than day trading stock. It's pretty illiquid. If you're used to trading stocks that have a ton of volume at each price level, this stock could rise or fall a quarter in one print, so it can be hard to get out of size. And then obviously I'm looking at the futures, very similar chart of the S&P, right? Goldman Sachs meets that kind of financial stock criteria. Not a bank like JP Morgan or Citigroup, but you can see again, what's the trade here? There's no trade here. It's trading in a trading range for over a month. Do not get chopped up there. JP Morgan, we just talked about. LULU, I'm looking to buy lower opening today. MasterCard, getting some MasterCard and Visa, both having some really good news lately that a lot of people in the next quarter, supposedly, again, where you read the charts, pay attention to the charts first. I wouldn't be doing anything until it gets above this level. But more online transactions, which obviously is good news for those types of companies, which is probably why PayPal is exploding as well. Microsoft actually looks pretty good. I'm looking to bid this stock long. Now it's at the bottom of the range, so a nice pullback. If we're drawing longer term trend lines, it would look like this. And you can see here, this is the first pullback to that level. So we broke it. Now we're probably going to end up in a box there again. If it breaks above the box, a little bit more aggressive on the longs, breaks below. Change of trend. We already discussed PayPal, like a long on a buy stop. NASDAQ, same thing. Starbucks had bad guidance. I am actually looking to short sell Starbucks on the bad guidance, depending on the aggressiveness. Will be dependent on the reopening, depending on where you live. But again, you can clearly see this is in a box, right? Nothing to do here until it gets out of the box. Don't get chopped up. We already discussed the SPY. Square, very similar to PayPal. Visa, obviously the same argument that we just discussed. And ExxonMobil, very similar chart to CVS. So CVX, excuse me. So you can kind of see how we start to put the pieces together subconsciously. I'm going to get a feel reading as many news sites, reputable news sites as possible, not ones that have agendas. Get your own idea of how the market's looking for the next week, the next month, the next quarter. If you want to drill down to some individual stocks that you're trading, obviously, absolutely do that. Then I go to the bigger picture analysis, looking to see where is the overall market, specifically the Dow, the NASDAQ, the SPY, and the IWM. Then I break it down a little bit further into individual ETFs and industries and sectors. If something's super obvious, again, like we've been doing in NASDAQ for the last few weeks, focusing on those tech stocks that have been super strong, waiting for the financial stocks to break down, which they did the last couple of days. Great job for everybody in the community who've made money in the Slack channel with me, as well as now which stocks have nothing to do. And you want to stay away from that because that's where money goes to die, when there's nothing going on and you're hoping to guess which direction. Don't guess. Let it tip its hand and let it get out of there. So that's how basically we set up the day. You saw my main universe. You saw the main universe of ETFs. Get ideas about which stocks to focus on, which stocks to avoid, and then set those alerts outside of those boxes. But then there was the BPT3 and the selling PT3, which, by the way, stands for bullish perfect trades that meet 3 criteria. You got to get behind the closed door to see that list. So anyway, have an awesome day, everybody. Thank you so much for joining me. Click down and subscribe if you find these videos helpful. Absolutely give us a thumbs up. And please, if you have any questions or comments or feedback about stuff that we cover, leave a comment about that too, and we'll have a little bit of a dialogue back and forth. Have an awesome day, everybody. Thanks for listening.